Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back. Today, we have a very special episode. It is a Tech Talk grain feed mashup. Usually at this time, you're looking at myself, Andy Faulman, and Paige Driscoll in the background giving us the Tech Talk trio. But today, we have two very special guests. First, coming from Chicago, Illinois, the keeper of the company calendar, the wrangler of the Muppets at Everag, the lifelong Bears fan, Jim Matthews. And coming to us live from Wichita, Kansas, we have a gentleman, the Baron of the Basis, the director of the Feed Foundations team, your favorite Western cowboy and mine, Mr. Jake Kingsley. Gentlemen, how are we today?
Good afternoon, Cody.
Doing very well, Cody. Thank you for having us.
We are excited to have you guys on as everyone watches both of our shows pretty intrinsically. Figured this would be the best time to get a little bit of a mashup and do them together after the 4th of July holiday. Everyone got their digits. No blowing off firecracker happening. There you go.
Not too shabby.
There we go. That's what we're looking for.
Did you wear that shirt on the 4th?
I did not wear this shirt. There's only 2 times I'm ever going to wear this shirt. Number 1, my wedding day. Number 2, when we have a grain feed and Tech Talk mashup. So far, only one has happened.
That shirt is phenomenal. I mean, you're the belle of the ball.
How many times have you tailored it?
Only twice. But I'm excited to have it on. I'm excited for you guys to be here and all of our viewers to watch us in all of our glory. But I think today, we actually have 3 charts, a little bit more driven towards the grain side, but also a little bit on the dairy side to give everyone a holistic view. Should we kick it off? Andy, what's our first one?
I don't know, man. I don't know if I'm going to make it through this one. I'm a little upset I didn't get a look at the tuxedo.
Well, next time we do this, get your tux on.
Or Cody's wedding?
Or Cody's wedding. One of the two. You're implying that we get invited to Cody's wedding. So we got to start with that. Anyways, let's talk corn. Christmas corn. I mean, this is Dapper Don's favorite chart right here.
Yeah.
Yeah, I'm talking about you, Cody.
I know.
So,
I know. It has been a favorite. It has been a reoccurrence on the show. And I tell you what, I think when we talked about this last time, breaking through 430, we had it again. What, Monday? Today's Tuesday, the 8th. We had 2 days in a row below 430.
Mm-hmm.
What do you think here? $4 next?
So I think when we talked about it last, we talked about 440. You already said it. But I mean, major area of what was once support became resistance, right? And so it broke at what? 1, 2, 3, 4, or tried to at least, and finally did. And once it did, look at that. It bounced right off of it. That's such a sign of great sign of weakness. So yeah, I mean, it's exactly what we talked about. You got that test and failure. I mean, it's hard to imagine the market continuing to break because you've already had so much of a break. It's one of those deals where it's you don't want to be the contrarian, right? Just because the market's been going lower doesn't mean it can't continue to go lower. Right. I mean, you go and look at the S&P or something like that. And it's just oh my gosh, how can this thing continue to go higher? Well, go back and look at historically, the thing's rocking. So I think when we looked at this last time, you were talking about that guy right there.
Yep.
That little dude.
Oh, nice little $4 gap.
It's $3.80, $4. It's your favorite though. Little Gaparoo.
Little Gaparoo, gap and go.
We have guests.
That's right.
We're curious what they have to say about this bad boy because this is Christmas comes early maybe for some folks here with Christmas corn.
Hey now. Well, yeah, and I think it's something that Jake and I discuss weekly on the grain feed, and Cody was our guest last week and talked about this as well.
What shirt was he wearing, by the way?
Not a tux, so not as an important of an occasion. Just to throw that out there.
I can tell you when he came to my house a couple weeks ago, wherever it was, he was not wearing that shirt.
No. Also not as important as a mashup. As a mashup.
What are you gonna do?
And on the mashup, let's make note of this chart here real quick, right, Andy? So this is a continuous corn chart here. So that 366 low, Jake, refresh our memory here, but that was the September contract trading that low last year. The December contract bottomed out at 385 in maybe mid-August last year for the D24 contract at that time. So
this is the SEP 24, right? What you just talked about?
Yep.
And this would be Christmas of 24.
Yep.
And then now we're on the Santa Claus. Okay. Sorry. I just want to make sure everybody got to look at those different charts.
I think for the great debate, right? The big question of this summer then for our dairies who are feeding corn to their animals is, do we go back and test those respective lows this year? Do we take the September 25 contract down at that 366 low? Can we take the December 25 contract back to that 385 low from last summer. And as you gents were talking on past couple Tech Talk episodes, you're talking about that D's 25 contract and that 435 to 440 support, then becoming resistance. That's something we've watched very closely as well. And to ultimately break through that, it's been very encouraging for feed buyers to see us break that and to come down and test really new lows over the last day or so. And if you just go to the D's 25 corn chart, is a just really interesting corn chart as of late, because we did enter that July 4th weekend, that 3-day weekend. We saw a little bit of consolidation in the few days running up, but then that Wednesday, Thursday leading up to it was, an explosion higher. And I think Jake and Cody and I had talked about that briefly was, do you see some de-risking from managed money heading into that long weekend, who are substantially net short corn at the moment in terms of the fund position? They take money off the table heading into that 3-day weekend. There is some speculation over, whether we come up with a trade deal with the Chinese, perhaps, that gets announced. We were settling the one big beautiful bill heading into that weekend. And of course, we have to worry about potential weather forecast changes. So it wasn't surprising to see that short covering. I think, Jake, I was surprised to see how aggressive of a move we saw in terms of that short covering to then come out of that 3-day weekend and gap that sucker lower was a really big move into Sunday night. And then another down day today after what was probably encouraged further by crop conditions being extremely favorable for corn. 95 plus million acres, projecting some really strong yields this year. Jake, what are you thinking of that move?
Yeah, I think that move, like you said, shows pretty extreme weakness in the market overall. I think it continues to encourage us to be patient in our purchasing of corn for the next feed year, because they went back up and tested their area that previously was support, and now this thing is just falling apart in a hurry. And I think it's on the back of crop conditions. We've cleared all of our 3-day weekends, so we've got full trading weeks ahead of us going forward. We've got a WASDE coming out at the end of this week, and then we're cruising right into the middle of July. You can get pretty confident in 2-week forecasts and what that's going to do to the crop for the remainder of the month. And by all accounts, the crop looks great in most every important area, even a lot of the fringe acres, as we refer to them. When you add a bunch of acres year over year, you start to get places like Texas and the Southeast that add some acres that normally wouldn't be corn. And Central Texas is looking like they're all but confirmed a record crop that'll be harvesting here in just a couple of weeks. Some of the most southern parts of that area have already started. Texas Panhandle has been catching very good rains, so they're off to a really nice start. Folks in the Southeast seem to be pretty comfortable with what they've got going on. So futures are doing a lot of the work here, and I would expect that basis starts to work in our favor here very soon as well, to get overall cash prices in a place where it's pretty easy to say, yeah, it's time to start buying some of this.
Cody, did you call him the Baron of Basis?
I did.
Baron of Basis. Yeah. Hey, well, there you go. Right there. Cody and Andy, what are we thinking of this chart? What's next for December corn futures?
Jim, short answers for me, what stuck out to me about the chart was a couple things on the weekly. So this is going back to the weekly real fast, right? It's these three right here, the secondary stuff. One at the bottom, it's the ADX. It's basically the advanced decline. So basically what it measures like the health of a trend. And when this is starting to move higher, it's signaling strength in a trend. So not necessarily like an uptrend, right? It's just saying that the current trend is gaining strength. So in this case, the downtrend. That's, if you're bearish, that's a good sign. Same thing goes for the momentum. That crossed zero, it's held through that and is getting into like new lows on momentum. That's a sign of weakness. And I drew this too. This is money flow. What this is basically saying is that more money is starting to pour into days, or in this case, weeks. Each bar is a week. Each week is seeing more volume when it's lower relative to weeks that are higher. So like money flow index basically is saying that like as more volume piles into like down days, it goes lower, and the inverse is true if it goes higher. So it's one of those deals that measures, I like money flow a lot. I mean, it measures Like it takes the price action and says like, hey, if it's substantiated by a lot of volume, that weighs more. So all three of these secondary stuff that we watch regularly are pointing to continued weakness in this trend. That's why I made the comment of like, just because it's had a substantial break doesn't mean it can't keep going. Unless Cody gets married and puts that tuxedo on and
Hey,
just
now.
loads up corn, cheese,
There
and
you go.
pizza and stuff like that.
You never know.
It's just going to be like off to the races.
Might be his wedding present.
There won't be enough corn in the world.
Yeah. There won't be enough. Yeah. Looking back at it, because I have it marked on mine from when Andy and I talked about this last week, and it was exactly, Andy, kudos to you, how you had talked about it. And I think, Jim, you actually messaged us afterwards.
Yep.
On Thursday, July 3rd, we had that pop back up to 440, where I think probably some of the shorts were trying to liquidate for the long holiday weekend, came back in here Monday and just got after the sell side and settling below that 430 for the past 2 days. I mean, I have to think we go test that gap at what, $384 here on the weekly. I mean, that's probably next testing point in my opinion.
It reminds me a lot of when milk goes to like $20+. And it's like, well, it's already at over $20. Why can't it keep going higher?
Yeah.
Can't. So yeah, I wouldn't count that out for sure. All signs point to more weakness. So now that I've said that, probably should buy it with both hands. We'll see how it goes.
Not yet.
Not yet. We'll see. We have another, we gotta keep on cruising here. We got two, three more charts we got to look at, right?
That's right.
Bean oil. I've actually had like several people internally hit me over the last couple of weeks. Just say like, hey, what do you think of bean oil? Pretty wild.
I guess just a quick question for maybe Jim or Jake. So bean oil, can you explain to everyone watching what the crush is to get bean oil?
The actual numbers?
Where does bean oil derive from?
How do you get bean oil?
All right, so soybean crush, pretty important to the feed industry here, and it's been a lot of talk over the last few years as the capacity of that market continues to grow, largely driven by incentives to produce soybean oil. So, of course, we know U.S. farmer produces a lot of soybeans. We traditionally have exported about half of our beans as whole beans, and we crush the rest to make soy oil, which goes into veg oil, vegetable oil for cooking and other things like that. And then the other byproduct is soybean meal, which all of our dairies and other livestock producers are feeding to their animals. Over the last few years, the government has created these incentive packages to make soybean oil more profitable as a feed source going into renewable diesel production to help out with some of the sustainable fuels and renewable fuel production in the U.S. And so what we're looking at here is a little bit of a response to 45Z, which was some tax code that made its way through Congress with the big, beautiful bill last week, which better outlines what some of those tax credits and subsidies to incentivize soybean oil production will look like going forward for the next few years.
Well, so I think, Jake, to take that a step further, one of the reasons that this chart is being requested frequently over the last few weeks for Tech Talk, and people are also hitting us from a Feed Foundation standpoint, wanting to know why meal stays under significant pressure and why bean oil then continued to ramp up here. I'd say, for one, just to explain further there, the relationship between meal and oil, because they are both the byproduct of crushing beans, you often see is one accelerates in price, the other faces pressure. And we're seeing that with oil and meal. But Jake, can you help explain those two green candles there and the gaps between them and what has really caused the recent disparity between the two byproducts?
Yeah, so the big jump there, where was that? Towards the middle of June, we finally got our second draft of proposed blending mandates for renewable fuels. So you're thinking about ethanol and now renewable diesel and a handful of other renewable fuels. The market had been anticipating a pretty sizable jump from 25 to 26 as far as renewable diesel blending into the fuel pipeline goes. And we finally got some reports from the EPA stating that they were going to jump up that blend by about 65%, I believe, from 25 to 2026. And then there's another decent jump from 26 to 27 as well. So it gives the market reassurance that the demand for soybean oil will be there and will increase as it was anticipated to do over the next couple of years. Now, this is a second draft of proposed blending mandates, minimums. I believe it is due to be voted on and finalized in December of this year. So there's still some uncertainty surrounding that. But again, the tax code incentivizing growth in this market made its way through Congress and is on the president's desk now. So that was half of the equation, and most are feeling very confident that the second half, the actual blending minimums, will go through in December now.
Very good. Thanks, Jake. All right. So that being said, Cody, Andy, what are we working with here?
It's really forming up to be one gigantic M formation, yeah? With a huge gap from the middle of June.
I was thinking the same thing. I was thinking the exact same thing. Where my head went was you had sounded like a big government announcement, right? If I'm understanding Jake correctly and Jimbo here, but the market failing to put in a new high after the fact. That seems like a big sign of weakness. And to Cody's point, you have a lot of unfinished business right here. And, we just looked at corn, right? And what was once support became resistance. Do we see the exact same thing here? Or more like, right, I'd say this is a tough one because you had these two candles really like throw this thing for a bit of a loop. But I'd say like kind of like right here, right? I mean, around 50, how do you quote this? $50?
50 cents per pound.
50 cents a pound, $50 a pound. What am I talking about? All right. So 50 cents a pound, more or less, it looked like it was making a head and shoulders, right? And then you have this big fat government announcement. There it goes. But this to me is just like, that's a sign of weakness. I mean, when you get this big injection of bold news, that's obviously not, it seems like it wasn't expected to this degree. I think about like Farmers Family Food Box program for milk.
Yeah.
When we got that announcement, I mean, I think the commodity doubled. But as soon as, when it started to come out, you had these big gaps and we never looked away. Or we never looked back, excuse me.
Agreed.
This one, you have this big government, it seems like a big government announcement, and the market's not handling it very well. So I look at this and say, like, people got really excited and are now kind of like, the market's taking a breath and saying, like, maybe not. So I'd be concerned about this going back to 50 cents when I look at it. This gap, unfinished business, lower high, that's a sign of weakness.
But Jake, you said that it's not voted on yet. So this is just a plan. Like nothing is in stone, right?
Right. Yeah. The final blending numbers will be voted on in December is what I understand. Now, I think part of this, if you look at a little longer term chart, 50 cents is still a pretty significant price hike over the last handful of years. You had a very big jump back during COVID with lockdowns and some humanitarian concerns in Southeast Asia as far as palm oil production goes. So that jumped up vegetable oil to those highs that you see there. But again, as you said, you got a big government announcement and price was nearly doubled. This effectively does double price versus what we had 2020 and prior. A lot of it was maybe built into the market leading up to this. And I think that's
okay, because this was at about 25 cents. So taking it to 50 cents, to your point, would be doubling it.
Mm-hmm.
Yeah. And I think to Jake's point, you get into the beginning of 2022 when we had also you have Black Sea conflict starting to restrict the access to alternative vegetable oils like sunflower oil. You also had the packages passed in 2022 during the Biden administration in terms of the Inflation Reduction Act and the green energy initiatives that really promoted stronger use of bean oil. The state of California really promoting its program to utilize renewable diesel and replace all legacy diesel fuel in their semi trucks. But as you've noted, Andy, at some point, the market starts to digest that and starts to consolidate and bring things back to normal a little bit. We did for quite some time. I think time will tell here over what Jake discussed in terms of that EPA proposal a few weeks ago, if we can maintain the strength that created in that gap higher.
I think the important takeaway from this for a feed buyer is that soybean oil now becomes the primary product of soy crushing rather than maybe 1A and 1B versus soybean meal. It is very much the front runner leading profitability at these crush plants and should increase availability and suppress price of the feed ingredients of soybean meal, canola meal, and some of those other related proteins.
Copy that.
Awesome.
I was just going to say 50 cents. 50 cents seems like just a gigantic number for this market. Without knowing anything what you guys just talked about from like a fundamental standpoint. this was like, as soon as the market cleared that price, it took, my gosh, how far? Man, I have to like scroll back. That's really Q1 of 21. We weren't able to break through that price effectively until basically Christmas of 23. So, but my point is that the market, I think you could argue this is on nearly a touch point too on a longer term basis right here. So one, this is a big rejection of that, and then finally broke through it. And then look at this, 1, 2, 3. It took 4 tries, but finally got through it. So this reminds me a lot of what we just looked at with corn. Just the opposite, right? This feels like it's going to go test that. I think in like the technical terms, it's called a throwback, where like there's pullbacks and then there's throwbacks. Or like I know I could have these mixed up, but basically like a throwback is where you break the resistance and then you go test it. And like a pullback is like the inverse of that. Like I said, I could have those backwards, tomato, whatever. But to me, that's what we're due for, right? Again, we looked at the lower high on a daily. You've got 1, 2, 3 testing of that. If you can't break through that price and start to go, yikes. Because you would need, like, really what you'd be looking for is a break through that price, and then like, you'd start talking about 40 cents.
And I think then, Jake, to your point, if we do break down towards 40 cents again, we probably see some support in the soybean meal market as well, and see protein levels start to find some renewed strength if you start to see that swift of a break in its fellow byproduct.
It's like do or die time for this thing. What's this high right here, by the way? Hang on. This high is 55.81, a little over double nickel. Gosh, if you got like a 56 settle on this thing and fail to go test 50 cents, what's this, 70 cents? Yikes.
Woof.
Uh-oh.
Woof.
Throwback Thursday.
Throwback Thursday.
Look out.
Throwback Tuesday. Throwback Thursday. Let's go.
Hey now.
Let's go. All right. Last one came from our esteemed colleague here, by the way. I mean, with that shirt, I don't know how you can't call yourself esteemed, by the way.
Feel very.
Your first name is Cody. It's not like Codiferous or something like that, or like
Not that I know of.
Codiferous.
Like my first name is Andrew.
Right.
Oh.
You know, I feel like you should be going by like whatever your full first name is when you're in that shirt.
Mine's Jimiferous.
Jimiferous. Like I always thought it was Jimothy.
Learn something new.
Yeah, learn something new. Anyways, speaking of heating oil, you wanted to talk about heating oil, and it's relevant to buyers. How? Let's start there.
Well, I mean, I think what we were looking at is equating this. A lot of times we equate this to the diesel contract.
Mm-hmm.
Starting to look at diesel. We're getting into, as Jake mentioned, some of the harvest coming up in the next month or so. Going to run through probably the end of October-ish throughout the country. And usually, I mean, kind of looking back around the same time frame is where we see a little bit of a pop. Kind of like when people start traveling, the gas prices get higher, diesel gets a little bit more expensive. People might have hedged it before, people might have not have. But I just found it was very interesting that not even a month ago, I mean, literally 3 weeks ago, we fell from 260 down to 220 and have made our way back 50% on that, sitting here on the 8th of July.
This is a daily.
That's a massive swing. Like this, when you look at it, when you have it on your screen, it looks like a weekly chart, but this is a daily chart. Like just the volatility that we've seen in this market recently has been pretty massive. And so far, I've had a lot of guys call in asking about it. I think because harvest is right in front of us.
Andy, the date on that one green candle that really starts to send us up. I mean, this is going to be tied towards the escalation of things in Israel and Iran, and us ultimately performing a successful bombing campaign in Iran. And you saw energy prices really take off there for a few days.
That's right. Where was that? Hang on. Let's just go take a look at that.
The 11th or the 13th or which?
This is crude. I remember that because it came well off the intraday high. Yeah, right there. Yep. So it's the 13th.
And you see a similar meltdown in crude oil pricing, having its strength extinguished there, and then heating oil, right? Both coming after the Iranians retaliated, if you will, on our base in Qatar, and then ultimately deciding that for the moment things have settled. And you really saw energy prices across the complex pull back fairly dramatically there.
Yeah. What sticks out to me is what we just talked about with some of the others. Is I drew this while you guys were chatting there, right here. It's 212 and some change, 212 and a half. I mean, roughly that's more or less where this market caught support. Once it broke through it, it bounced once, twice, made a nice higher low, right here. So you could argue that I think the name is an ascending triangle right here. And so it failed to go test that right here.
Yep.
Like this to me, like I look at this and say, this is more important here. I mean, I feel like when you look at this chart, what sticks out is it's easy to go look at this. I mean, look at this. That's just like a beast of a candle. It's ridiculous. But what sticks out to me is this 3-bar pattern right here. because it's a clear failure to go test this, what was once resistance, right? And so the fact that you can't even get a good testing of that, like, to me, it's, I think I always butcher the expression, but it's never the first trip to a price that scares people. It's the second or third. That's what I think would be kind of worrisome for this market is what happens if this thing gradually makes its way back to 250? Because you failed to go test the support.
Mm-hmm.
Market got the news, took off, shrugged it off, and is now building that 3-bar pattern right there. This is what sticks out to me the most, right? Bam, right there. Had the momentum. If you just look at it too, had the momentum to break. Buyers looked at that and said, I don't think so, dude. And right back up. That is a sign of strength. So yeah, I guess my question would be, what if this contract went back to 250, 2.5?
I think, we're talking about margins. You want to talk about a big margin proponent would be diesel on farm, right? For no matter who it is, that could be a big gut shot going back to 250, 260.
I agree. This looks strong. And again, it's hard to look at this without being like, oh my God, look at this candle right here.
Yeah.
But you've had a really nice base that got built, right? Here, broke through what was clear resistance, and then failed to go test it on retracing that breakout. Let's go take a quick look, a little peek ski. Yeah, like, I'll tell you what sticks out to me. Let's just do this real fast.
Oh, yeah.
Oh, long-term, very long-term trend. Gets broken, tries to come back in, fails to maintain like the throwback in there. That's a breakout.
Yeah.
That's a breakout.
Yes, it is.
Broke out, tested it, and is back out of it again. Now it's only what, Tuesday? What day is today?
Yep. Tuesday.
All day?
The 8th.
All day, right? Throwback Tuesday. That's right. Sorry. Throwback Tuesday. So we still have a whole week for this bar, but that looks strong. I would not be like kind of, I don't know what the word is, like intimidated or like when you look at this bar, like, oh my God, look at that. But this is, to me, the biggest concern is that you got out of a very long-term downtrend and are maintaining that.
Okay.
So I have a question.
Go for it.
Ancillary. I think it's a kind of an ancillary question. I don't know. We'll see.
Don't know what that means, but sounds interesting.
So, Cody, would you rather be a Bond villain or Bond himself?
Oh, man. Bond himself.
You said that pretty quickly, like you've thought about it before.
Yeah.
Like, I don't know.
Is Bond's greatest villain himself?
Yeah, I think so.
My own greatest enemy is myself.
Wow.
What? Like, that's just deep.
It's getting deep at Everag.
That is very, very deep.
I feel like I'm in the trust tree.
Well, if Everag doesn't work out for me, I can also become a villain of something.
A Bond villain.
Yeah.
That sounds like a threat. We should get a compliance person involved in these shows.
A grain villain to anyone living in Wichita, Kansas.
Oh, wow.
And fired.
And you're fired. That's
Well-
all I got, guys. I appreciate it. Like, I learned some new adjectives today, and
Me too.
I learned I need to update my wardrobe, by the way.
You got to.
Yeah.
I've had this bad dad in the closet for a little bit of time, just wondering when the right moment would be to pull it out. And this is,
Wow. You can grab the lapels.
oh, yeah. I might actually get like an actual suit or maybe an actual tuxedo next time.
You just do it, Jake and I do. We wear the same shirt every day.
I've never seen you guys without those shirts on. I think I'm going to be a Pearl Snap guy from now on. I made that decision January 1. It hasn't come to fruition. I'm a Pearl Snap guy now, and I'm going to get a bolo tie.
New Year's resolution.
Paige likes that we're still talking. I bet she likes that.
She really likes it. Her and Lexi are shaking their heads. Awesome. All right. Well, with that, everyone, we appreciate you guys watching this mashup of Tech Talk and Grain Feed. Jake and Jim, as always, we love having you guys on here. We hope everyone got as much information as I did out of this episode. If you have not already and you do like the information coming out of Everag, please hit the subscribe button. Give us a thumbs up. Leave us a comment. Let Andy and I know what you want to look at on Tech Talk. We're happy to take a peek at it every week when we do these shows. This week, I think probably because of the 4th, we didn't have a whole lot of folks writing in. We didn't have anyone writing in this week to look at any charts, but we appreciate you all tuning in. Jake and Jim, again, thank you for being on here. Paige, Lexi, thank you for pulling all the levers, pushing all the buttons, making sure we didn't say anything to get ourselves fired. With that, everyone have a great week. We'll see you guys next time.